China, the world's second-largest economy, has reported faster than expected growth in the January to March quarter. But the devil lies in the details, and they suggest things are set to get tougher in the rest of the year. Now, the country's GDP rose 5.3% in the three-month period, accelerating slightly from the previous quarter and beating estimates. Strong U.S. demand, improving labor market and Beijing's focus on advanced technologies helped China post strong growth in the first 3 months. But after growing in the first 2 months of the year, the economy began to slump in March. Growth in retail sales declined and industrial output fell short of forecasts, suggesting challenges on the horizon. The government said the economy got off to a good start in the first quarter, but cautioned on external risks. It further said, and I'm quoting here, the complexity, severity and uncertainty of the external environment is on the rise and the foundation of economic stabilization is not solid yet. The latest data highlights the unevenness in China's recovery. Cement output plunged 22% in March. That's the largest drop since records began in 1995, highlighting the impact of the housing slump. On the other hand, production of integrated circuits and new energy vehicles, considered China's key economic drivers, grew around 30%. Falling growth in restaurant spending and a declining automobile sales show consumer demand remains weak in contrast with strong investment. Moreover, China's factories use less of their potential than any time since the pandemic. A big downside of the first quarter growth is that it may reduce the prospects of additional fiscal stimulus. That's because officials may conclude that they don't need to implement already planned measures. Most economists agree the latest numbers suggest the government's growth goal of about 5% is well within reach, but they warn that policymakers do need to take more action to stabilize the property market and encourage consumers to spend. For latest news, download the WION app and subscribe to our YouTube channel.